Hello and welcome to this special edition of Market Editor. The markets may be our starting point today, but we are diving deeper into a space that's buzzing with opportunity. India's emerging dominance in the CRDMO space, we call it CDMO, contract research, development and manufacturing. And to help us decode this theme is none other than seasoned investor and market veteran Madhu Kela.
That's right. Over the next 30 minutes, we'll spend a few minutes on Madhu's current take on the market, but the spotlight is firmly on a sunrise sector where he sees immense long-term potential. We'll also be joined by the managements from Laurus Labs and OneSource Pharma, two companies at the heart of this CRDMO story, with Madhu turning interviewer, asking them the key questions on scale, strategy and science.
Well, from investment insights to industry deep dive, this promises to be a power-packed half hour. Let's dive straight in. Madhu, welcome to the program. Thank you very much.
Thank you so much.
And we can take a back seat today.
No, absolutely. We'll all do it together.
हम आराम करेंगे, आप काम करेंगे.
We'll all do it together.
But I think you've done so much work on the entire CDMO space. You and your team have really done fabulous. I mean, we'll try and get at least a fraction of it on the air as we go forward. But since we have you with us, Madhu, I want to start with just a quick view on the markets per se and where we are. We've come a long way from the lows. What is your perspective now?
Prashant, from a big picture perspective, we have spoken this many times. I would once again request that people must not extrapolate what has happened post-COVID in terms of return, in terms of finding multi-bagger opportunities where money has gone from 10 to 100 times, right? Because the lows were so drastic, the returns were fabulous, right? So I don't think that we must expect those kind of returns. Having said that, I am not in a camp that the bull market is over and this is the beginning of some bear market, and you can take the number reference from wherever you want. So if you take the reference from COVID low, then the returns will look very, very attractive.
Correct.
And hence the next 5 years may look very dim. But if you take the same base from 2013, when the market was at a low, then it is again average return which the market has delivered, including the last 5 years. So my point is that India is and will always be a bottom of a stock picker's market, wherein the broad indices may give you nominal returns. But because of the volatility and the fluctuation, and because there is choice of so many sectors, you have the opportunity to make, in my view, 15 to 20% kind of return is still in these markets. And you see what has happened in the last 2 months. Take, for instance, the financial sector. So many NBFC companies, even smaller banks, even large banks, while the markets have gone up only 7%, but a lot of these companies have gone up like 20, 30, 40, 50%, right? So that is the market which we are going to be seeing from now on.
Very disaggregated, maybe stock specific, right?
Exactly.
Within sectors, not everything, but...
Exactly. You have to be betting not only the right sector, but the right company. So we are back to basics.
You turned cautious, I think, around the time that the market topped out. I mean, September, October last year.
Exactly. And we had a detailed interview at that time.
Absolutely. And you, at that point, your cautiousness came from the fact that actually on the ground you were seeing it, that things are slowing down, earnings will perhaps not come, and all that played out. What is the feedback now? I mean,
Prashant, this was clearly a stock market problem.
Okay.
Go to speak to any entrepreneur or a company. There's no real issue with the companies. There might be, 1 or 2 quarters of earning postponement because of the election, the spending did not happen, etc., etc. But the valuations, the way they had gone up, and the participation of public also. It was mainly this correction is because of the stock market problem. It is nothing to do much about the fundamentals or Indian corporate problem or the economy problem, I would say, right? So we are back to, as I said, that correction in my view, a significant part of it has happened. And let's not forget, when we were talking in September of last year, we were talking of 2024-25 number. 3-4 months from now, we'll start talking of 2026-27 number. So on one hand, the prices have corrected. On the other hand, the earning trajectory has shifted by 2 years, right? So I think I am at least able to find some value in some select pockets. I am still not saying that you go out and just buy the market, whatever you like. It is a lot of hard work to find good ideas. But they are there now, which I was quite nervous, let's say 6 months back. We were virtually able to not find anything, trust me. Yeah.
So this is not a market where a rising tide lifts all boats. It's still, you have to pick and choose your winners in every sector. But one sector which you're very bullish on, and you have been, is pharmaceuticals.
That's right.
I mean, we're going back 7-8 years back, and you've spoken about stocks like Divi's Laboratory. So first, the big picture. Pharma has done well, if you look at it over the last 5 or 10 years. But you're bullish on it for the next 5-10 years. What do the numbers tell you?
It is, you know, when we did, and thanks to the CNBC team, you made me a student again. So I think we actually did some numbers, and numbers is so heartening. In 2005, the total industry size of pharma was 28,000 crores, including API, local, everything put together, and profit was 2,500 crores.
And we have those graphics which will come up, which will very starkly put out, please.
This, Prashant, has gone to 6 lakh crores. And this year, the profit will be 80,000 crores. So after IT, this actually is one big industry which has got developed in the last 20 years. So many great companies, you know, Divi being obviously one of the most biggest wealth creator, but so many great companies have come. And from where we started, merely as a API supplier, that's how we started. We went into generic, then we went into complex generic, then we went into, you know, local markets have grown. And now the CDMO opportunity. So the margin which used to be 10 years back, the overall industry margin which used to be 15% has now gone to around 23%. And you look at the change, right? Today, in the total FDA facilities in the world is only 1,425, out of which 396 plants are there in India. So you are talking about, you know, 28% market share in US FDA plants, while our market share in terms of global CDMO or global pharma is still very minuscule, right? Total size of the global pharma industry is $1.5 trillion. And we are still, let's say, 6 lakh crores.
Yep.
So it is still very small. So I am quite positive that, you know, over the next 5, 10, 20 years, this industry has a lot of leg. And what came out clearly was, obviously you need, it's a very long gestation industry. So you need to make upfront investment. So the size of the profit of the industry still was so small, even 10 years back, that kind of investment was not possible to be made. But now, with the size of profit increasing, like this year, cash flow will be 1 lakh crores of all pharma companies put together. And the size of the whole industry 20 years back was 28,000 crores. So I think once this cash flow starts getting on the ground, the opportunity will
That number is very stark. And again, I mean, those graphics will come up again. 28% of global FDA-approved facility was 4% of sales.
Exactly.
Is that because of scale? Plants here are much smaller. Is it because of the kind of products which are manufactured?
And also, it is also because of that, we are also, it's a transition. You know, pharma is a very sensitive thing. So quality, when you look at it, if there is still inspections which happens in Indian plants where they are still able to have quality issues. It is also got to do with scale. And also, let's not forget, when N-1, N-2, we are still dependent on China for basic stuff like solvent, starting material. When all of that shifts to India, which I think will happen in the next 3-4 years, because see, if you are a global major and if you are placing your bet on India, India is still sourcing those material from China. So that to that level, your cost competitiveness is not established. But Prashant, this is all work in progress, in my opinion, and we are in the right direction. What is most startling, in my view, the global CDMO industry, which is, let's say, roughly $200 billion, we are only 8 billion, which is 4%. So our market share in FDA-approved facilities is 20%, and there it is only 4%. And it is like, you know, everyone knows that the cost of manufacturing in the US and UK, which is 65% of the total global CDMO industry, is very, very high compared to what it will be in countries like India and China. So if you take a 5-10-year view, incremental growth definitely will shift, and some amount of market share will shift to countries like India and China.
If I can just ask our producers to pull that graphic up. This is that table, I mean, in global CDMO market, and the total shift which Madhu was talking about. The numbers will put things into context once again, which he's already made the point. So the total CDMO market, $214 billion. Not this one. The third one, $214 billion is the total CDMO market. In 2028, as Madhu said, that number should be north of $300 billion. That's a 42% increase. That's a number, 42% increase. And then the share of India. India is about $8 billion as of 2024. And that will go to about $14 billion. That's a 75% increase. That's the number that you're...
That's right. That's the number which I'm referring to. And these are obviously estimates made by some Fox and Civilian, which is a very reputed firm. And this is not a 3-year story. What I'm saying is that this is a really long-term story, while the estimates which we have is only for 3 years. But I'm quite confident that this will carry on for a decade or two.
That's the number. 8 to 14 billion. So this is $6 billion opportunity, Madhu, is what you're focused on.
In the next 3 years.
Yeah, in the next 3
years.
Which
is a very large number.
Yeah.
Which is very large. Because the size of the industry itself is 8 billion.
Correct.
And you're talking that you will add, if I take 4-year view, you'll add another 8 billion.
So just one question then on the stocks and the valuations. Now, while no doubt that this is a structural opportunity, say for the next 10 years, for the next decade, it's the theme to watch. Within this, are there cycles? And are we close to the top of a cycle now? Because, you know, I mean, how do you think about valuations? Because stocks...
Valuation, you know, again, these are relative valuation. Another thing which we just did work on, let's say take for EMS space, you know. I am nothing against the EMS space, you know. We have also invested in some of those companies. But those companies are making 5% EBITDA margin, and some of them are quoting at 60, 70, 80 PE multiple and 40, 50 times EV EBITDA. And this 5% includes the PLI benefit, right? And here, these companies are making upward of 20% margin. Some of them are guiding for 40% margin. And these companies are still available at maybe 15 times EV EBITDA if I take a 2-year view. So I don't think the valuations are rich, and you should not compare company A and company B in pharma. These are completely two different segments. And some guy is only focused on API. I can't compare him with CDMO or the local generic company.
Got that. You know, so that sets the base for the next leg of the conversation. We'll take a break, Madhu, and on the other side, Madhu will turn interviewer, and he'll be speaking with 2 companies from the space, and he'll ask them the size of the opportunity, which he believes to be strong, but we'll really get into it. Laurus Laboratories and OneSource Specialty Pharma, the 2 companies you'll hear from Mr. Chava and Mr. Sharma are with us.
Welcome back. You're watching our special edition of Market Editor. We're in conversation with veteran investor Madhu Kela, and his belief is that time for India CDMO has come. That's the big theme he's betting on for the next decade. And before we invite our corporates on the show, Laurus Laboratories and OneSource Specialty, let me just put up the standard disclaimer. The stocks that Madhu may talk about, he may hold it, his team may hold it, and these may be stocks and companies that he has personally recommended to. But let me now invite on the show Satyanarayana Chava, founder and CEO of Laurus Laboratories. Madhu, all yours.
Thank you so much.
Go on, Madhu.
Go on.
Straight up.
Good morning, sir. How are you?
Good morning. Good morning, everyone.
First of all, thank you so much, Dr. Chava, for accepting this invitation. Deeply appreciate it. You are one of the few persons we have been following the pharma industry. I have really highest amount of respect for. And the way you have navigated Dr. Saab Laurus Labs from being 5 years back, a few years back, just being a main ARV supplier to now being a top leading company in the CDMO space, and going forward, you are talking about biopharma, you are talking about gene therapy. What goes in your mind when you formulate this kind of strategy and you are years ahead in the game?
Thanks for asking very broad and interesting question. The industry is going through significant transformation, and India is at the right place and right position right now to capture this opportunity. You are saying the amount of opportunity in front of Indian pharmaceutical companies in CRDMO is multi-billion. Your number says it is over 8 billion in the next 3-4 years. The opportunity I would say, fragment this into two buckets. One is research and development, and the second one is development and manufacturing. The development and manufacturing needs significant investments. Assuming the 8 billion, if you take half goes to research and development and half goes to development and manufacturing, then that 4 billion opportunity in the next 4 years, people have to invest $3-4 billion capex to capture that $3-4 billion opportunity. So
sure.
The opportunity is very large, provided our investments are also very large, not only in capex, but also in technology, also in recruitment of people and training them to deliver products. I would say the current situation is there is business, there is money, but the opportunity can be realized provided if we recruit right talent and train them very well. I would say opportunity is very, very large. And the companies who are geared up to tackle this opportunity will see a significant progress, significant growth in front of them.
Dr. Sir, these numbers look really staggering, right? You know, we have 28% market share in US FDA approved facility, but only 4% market share in actual revenue, right? And the other point is this 214 billion going to 300 billion, and there is significant growth even beyond that. And EU and America, which are clearly high-cost markets for doing this CDMO, CRO, CMO work, they still control excess of 65% market share, right? So as a country, before we come to the company, as a country, what do you think we need to do to get a meaningful market share? Because on the face of it, we seem to have all the right talent to capture. We have now the capability and the size of the profit for Indian companies to invest into this. But still, our market share is only 4%. So according to you, what do we need to do as a country to really get a significant share of this pie?
In the cards for big pharma, when they launch a new drug, it is single digits. In most of the time, it is less than 5% of the sales, sometimes even much lower. For them, the decision to identify a partner predominantly doesn't depend on the cost. It depends on the longevity, sustainability of the organization. So, will a big pharma will choose a partner because he is cheap? I don't think so. In CDMO, it doesn't happen. In research and manufacturing development, it may happen because they are looking at 1 kg, 5 kg, 100 kg quantities at that stage. But when they do phase 3 and commercial, for them, companies of scale, companies with good track record, good sustainability, then only they will get business. So if you compare our manufacturing cost is cheaper compared to Europe, US, that is the reason we get business. I don't believe in that hypothesis. It's capabilities, scale. Those are very, very critical for any Indian companies to capture the opportunity.
Yeah, yeah.
Mr. Chava, good morning, sir. Prashant here. We had the Eli Lilly global CEO with us 2 days back, and they said the cost of development of a new drug from right from scratch is about $4 billion. You put those in percentage terms. As a percentage of sales, about 5% of the value of the drug was they're able to monetize. Just to come back to the earlier question, Mr. Chava, you said that those numbers that we put up, it's about $6 billion in opportunity over the next 3 years. You said we need to invest $3-4 billion to be able to capitalize on that opportunity. Is that the correct way to look at it as an industry?
I took an industry benchmark, assuming you have a 2 times asset turnover ratio. That means every dollar you invest, you get $2 revenue. That means you divide $1 billion extra opportunity for any company. They have to invest at least $500 million in capex to capture $1 billion revenue. I took a number. See, 2 asset turnover is very, very high in the industry. I took very high number. If I take 1 to 1, then for every $1 billion revenue opportunity, they have to invest $1 billion. So somewhere between $500 million to $1 billion people have to invest to capture $1 billion. So that's the number I gave. So capex intensive, and it also takes a lot of time. By the time you put facility and you get the commercial opportunity, it takes 3 years. So you have to invest money well ahead of the curve to capture the opportunity.
Thank you, sir. Neeraj, good morning and welcome to you. Deeply appreciate you joining us for this show. Neeraj, I think you guys have just created a company which is like OneSource, which is purely focused on this space, while you merged a lot of your group entities and created. So if you can run through what is the strategic intent of getting all of these businesses together, and what are you looking at in this entire very large opportunity in the CDMO space? And the second point, Neeraj, the work which I did clearly says that quality concerns is one of the reasons why the business is moving very slowly to India. People are still concerned about the US FDA audits and the kind of quality Indian companies have done, specifically in the last 10 years. Your group has had a phenomenal track record of 19 years of having a spanky clean track record with US FDA. So how important is quality, and how did you manage it at your group?
Yeah, thank you, Madhu, for having me here. And to your first question around what was, let's say, the inception philosophy around OneSource. So it's basically started with the need of our customers to reduce complexity in their supply chains, and their need for having a one-stop shop solution in terms of CDMO partners. And that's where we come in by having our multiple offerings. So we reduce their complexity in their supply chain, and in turn get a much higher share of our customers' wallet. So to just tell you a little bit around what OneSource is and why we are one of a kind. One of the points you already mentioned around compliance, but not just our key differentiation which we offer is around our capability, which we are today of having one of the widest offering in the CDMO industry, right from biologics, drug substance, drug device combinations, sterile injectables, oral technologies around soft gelatin capsules. So across this, it is a very wide offering and a real one-stop shop solution for our customers. That's our capability. Around our capacities, we offer some of the largest capacities, industry-leading capacities in drug device combination cartridge filling, for example, where it's all isolator-based technology. Soft gelatin, we are among global leaders in that area when it comes to capacity. And finally, what really differentiates us along with the capability and capacities is our compliance status, which is what your question, your key point which you mentioned. So our compliance record has been stellar, and yes, this is important in pharma more generally, but in CDMO, it is absolute critical, because that's what customers, global customers, Indian customers, any customer comes to a CDMO for really that compliance track record. And we in the group, and that's been the group's DNA, with a very, very clear focus on quality and compliance. And that has brought us, where we are with, as a really CDMO partner of choice for our global customers.
Neeraj, can you elaborate a little bit more on this GLP opportunity, the capacity of 40 million units which you have set up, and strategic intent is to increase that many-fold. And I, based on my work, the work for this started in 2016, and now you are about to get some revenue, right? So it has like taken you 8-9 years to actually come to the customer level. So why is it so difficult? On the face of it, it looks so simple that you have a device by which the drugs will get delivered. So if you can, the people watching us are not experts. So if you can, simple words, just explain why is it this entry barrier so high, and why OneSource is the only supplier in India and only approved facility in India to make these cartridges which deliver these GLP drugs?
Sure, Madhu. See, for us, Madhu, all our service offerings, I mean, you mentioned one of those, but all our service offerings are around this, niche and complex capabilities, whether in terms of development, in terms of manufacturing, and finally in terms of compliance. I mean, starting with specifically drug device combination, and GLP-1s are part of that. We are fairly unique as we offer, we are among, the very, very few, even globally, offering end-to-end solution for drug device combination, including GLPs. So not just the fill-finish part of it, but also the assembly of cartridges or PFS or pre-filled syringes into pens and auto-injectors, which is specifically for GLPs, the most complex part of the value chain. And this, as you rightly mentioned, this capability has not happened overnight. We have taken, it's been almost a decade where we have added, we have invested, we have built, we have learned, we have executed multiple projects, multiple customers, and that's where we are. It has taken us a decade to be in a position where we are, let's say, our leaders when it comes to drug device combination in India. So this is the reason it is tough is because it is an area which is complex. The interface between drug and device is complex because eventually what a patient takes is not the cartridge or the pre-filled syringe. The patient uses the actual pen or the auto-injector. And it is all about self-administration. I think that's where the key is. Our expertise in self-administration, that is what makes it complex. What makes it complex is if you want to start a new investment today in capacity, it's a 5 to 7 year cycle, right from ordering these complex equipment to making regulatory submissions to getting your inspections done and so on and so on. It's a very long cycle, and it requires a lot of learning, learning through failures, learning through multiple customers.
I'll come back to you. Thank you so much. I'll come back to you.
If I can just, Madhu, just take one question. Neeraj, your supplies to Eli Lilly as well. I was saying we had the global CEO with us here on the channel 2 days back. And of course, they were talking about Mounjaro, which is also an injectable. But at the margin, do you think this opportunity will move more and more to the oral side, which is easier, I'm assuming? Or that's not is that a risk at all?
So orals definitely have a role to play, Prashant. Absolutely, orals will be important. But in these products, the challenge with orals is, of course, the efficacy of orals is nowhere compared to injectables. And orals require very high drug, which obviously means that the side effects profile of orals is significantly worse than injectable. And remember, these injectables today are once a week. Once a week is an easy one rather than a daily tablet.
Sure. Dr. Saab, coming back to you, obviously China is a big contender for this opportunity. And on the face of it, they clearly seem to be definitely ahead in the game, whether the size of the company like WuXi, which is close to $6 billion, and still our companies are significantly smaller as compared. So when this Biosecure Act was going, clearly there was a compelling reason for a lot of companies to shift to India because of the act itself. Now, since the act is being deferred, what is your view? How are we going to compete with China? And at Laurus, what have you done over the last 3 years in terms of building capabilities which will enable you to even compete with countries like China?
Thanks, Madhuji, for asking. In the last 5 years, at Laurus, we have invested $500 million in CapEx. That's a significant number when compared to our size of the revenues. We invested because we saw an opportunity. There is a macro trend. The number of small molecules approvals is going up. Earlier, if you ask the same question 10 years back, everybody is thinking the day of small molecules is going off and the market will be dominated by biologicals. But now, the number of small molecules approvals is going up. Number of small molecules, complex small molecules ratio is going up. For example, if you take GLP peptides, those are large small molecules. Each one needs 40, 50 chemical steps. So the complexity is going up, so the investment has to go up. So the need for small molecule capacity has increased significantly in the last 5 years. Whether Biosecure Act comes or not, the need for large molecule, large capacity for small molecule has increased significantly in the last 5 years. So business is there for Indian companies, whether Biosecure Act is going to effective or not. That is a small thing to worry about. The most
is it right to assume that because of the Biosecure Act and also because of China plus one compulsion, lot of customers have had a chance also to look at Indian companies, and obviously our offerings are quite compelling. So even if the act gets deferred, there is still that China plus one compulsion is there, and we'll get a fair share of our market in the global industry.
You're absolutely. The vendor diversification is happening globally. It could be from China, it could be from Europe, it could be from elsewhere. So that diversification happens. Indian companies are well positioned to take that opportunity. It is absolutely, as the opportunity is very big, I don't think all companies can put together take that opportunity. So business is growing. As you mentioned, there's a $80 billion growth in the next, say, 6-7 years in the CRDMO market. India has its share. I think market is big. Let's see that as an opportunity rather than people moving their assets. See, one thing, as you mentioned, there is a shift in adding new vendors into the supply chain. That's quite visible when people look at the number of RFQs, number of programs, number of customers visiting Indian companies is going up. So that's a good sign. Onboarding a customer and going to commercial is a 3-4 year process. It doesn't happen overnight.
Sure. Dr. One more, sorry for asking you this question. I'm apologizing in the beginning itself. But, I see that you are fairly ambitious. And as you said, you put up a lot of your bandwidth and capex in the last 4. So right now our size is 1,500 crore. Do you think it is in the realm of possibility? And I'm not asking for any guidance. This is only aspiration. Is it in the realm of possibility that the Laurus CDMO business will be of $1 billion in times to come in the next few years? Only we are talking of, yeah.
No, I don't want to put any timelines in place. But
no, I didn't even ask for timelines. I said in times to come.
Opportunities are there. I'll leave this question at that stage.
Okay, thank you so much. Neeraj, just coming back to you.
You face the same problem we face sometimes. We ask for numbers.
But he has answered it.
No,
he doesn't want to put $1 billion, but he has answered the question. Neeraj, just coming back to you, you have guided for a $400 million top line in the next 3-4 years. 1 year is already passed. So we are hoping that it will happen in 3 years. But what is stunning is the margin guidance of 35-40% on that kind of number. So can you speak a little bit more on the path to achieve this 400 and life beyond $400 million? And what is not what is the optionality which is not included in this guidance?
Sure, Madhu. See, we have said, right, we have given this guidance that we'll be a 400 million company in the next 3 to 4 years. And here, there are multiple legs to our business which will help us achieve. Obviously, the key growth driver, one of the key growth drivers will be our biologics drug device combination business. As many of these now GLP, especially semaglutide, comes off patent in some of the key markets, which will really be driving. So our first market which comes off patent in Canada is in January 26 is Canada, which incidentally is the largest market outside of GLP-1s outside of the US. Then the largest market outside of North America is Brazil, which comes off patent in March, along with other large markets like China, India, Latin America, and so on. So all these, will be driving, and we have, all our customers or many of our customers will be commercializing products. So that will be a key driver of growth for us for these 400 million number. But not only this, we also have, our soft gelatin business where we have actually expanded our capacity recently by 3x. And there is a huge constrained supply today in this area, and we have long expertise and now also capacity to deliver. So that will also be, a key driver of our growth.
Looking at the margins of 40%, do you think competition will come in, and there will be many more players who will come in the same space? And if these players come, will they still face the same gestation what you had?
Absolutely, Madhu. So the competition advantage, as I mentioned, is built over time, right? You yourself mentioned that for us to reach this position of leadership in drug device combination, it has taken us a decade. And I have, zero doubt that while, of course, competition will come, and we always welcome competition, it will take everybody time to reach this level. As I mentioned, it's a very long gestation. It's a high capex, long gestation, which leads to this position. It also requires, learning and unlearning. So we have been all through that, and the competition will have to face the same. And the first mover advantage that we have built will continue to help us, continue to win the trust of our customers, both existing as well as new.
Got it. Dr. Just coming back to you, maybe this is the last question. How will Laurus look like 5 years from now? I know it was a different company 5 years before, when you had ARVs, you have APIs, you had only formulation. Now we are talking of CDMO. What will Laurus look like? And I don't want any number in terms of qualitatively. What are the areas which you are very bullish on, where you're going to do the capex? And if you can say, in the next 4 or 5 years, what kind of money more will invest to build capabilities, and what are the capabilities which you are focused on building?
If you look at until we started doing formulations, 2016, all our revenues used to come from APIs and majority from antiretrovirals. Today, our API business is still 50%, and CDMO is 1/3 out of that. In the, say, medium term, we expect our generic, which means both API and formulations, will contribute still 50% of revenue. And CDMO and our biologicals will contribute the rest of the 50%. So from 70% generic revenues right now, in the medium term, we expect our CDMO will grow to 50% of our total revenue.
Neeraj, one last question to you. We all know that the opportunity is very large. What are the significant risks you think for the industry, over the next 5 years? What can go wrong for India, and what can go wrong for OneSource?
Madhu, risks are inherent in any business, right? So how I see, we have Dr. Chava also alluded, there are multiple opportunities for the CDMO industry today, right? There are so many tailwinds globally which are helping, and I'm absolutely sure Indian CDMOs will take advantage of those. The risk obviously is around execution. For us to be able to take, the market is there, the demand is there, how we will be able to execute well. And the same, I also would say for OneSource. We have multiple capex projects, capacity expansion projects, which we are working on to meet the demands of our customers. So, my team and I are completely focused on delivering those projects because those are key. And the second risk I see is always around compliance. You mentioned, and I told you, reiterated, that we have a very stellar compliance record. But end of the day, we are only as good as...
Still, you have to manage it every day.
So we are absolutely focused on maintaining that track record.
I want to thank both of you. We are really running short of time. We could have gone on for another half an hour, but the time is short. So thank you so much for joining. Deeply appreciate both of you.
I want to thank Mr. Chava and Mr. Sharma, both of you. Thank you very much from us as well. For sort of educating all of us. It's a precise business, it's a tough business, but I think as both of you said, the opportunity size is large. Execution, of course, will remain key. Madhu, I want to thank you as well for taking us through a very well-researched segment.
Yeah,
and I must say you're a natural, so do this more often and give us a break.
No, absolutely. Thank you, Prashant. I think it was quite interesting, and as we can see, that both of them have affirmed that the opportunity is large globally, and there is a really reasons for this to shift to India. And now the profit pool of all Indian companies is large enough for them to make investments.
Right.
So let's hope, some companies will really make it big out of India as well.
Absolutely. And, just to wrap up with a disclaimer as well, Madhu, of course, is an interested party.
Yeah,
in terms of course, looking for opportunities, having been invested in the space as well. So do your own research. This was meant as an educative program, and I think we did learn a lot. Thanks once again, Madhu.
Thank you so much.
Thank you. Well, from Reema and me, it's a wrap on this special edition of Market Editor. Keep watching. Markets, I think, have come up a little bit. So all of that coming up after a quick commercial break.